Hello, this is Tom Clow with this week's Precious Metals Market Update. I want to jump right into this the week we've talked about every year for the 40 years I've been in this business, and especially the last 16. We can kind of get predictability that when the last future contracts expire this Thursday and Friday around the world, we usually see a jump that starts in metals that goes in and starts after Labor Day. And the wedding season in India is way underlooked because there's a massive amount of gold that's purchased for the dowry and the wedding that take place this time of year in India coming up in September. So this week, as we watch this pull back, silver and gold, as always, the third week of August, we usually see a pullback followed by the two best months of the year, about 14 of the last 16 years, if you look at September and October coming up. So this is a great time to be looking and watching this week as the future contracts expire on Thursday and Friday, and then we think we'll start seeing demand picked up as people come off vacation, kids are back in school, people are back at work, the Europeans are back from their holiday in August, and we're looking at a robust time for physical gold and silver. But the other thing we want to talk about, we've been talking about for weeks and months, is the special drawing rights that China will be given on October 1st. And here we are now, less than a month, 3 weeks from when we'll know how much gold reserves they have, as well as dollar-denominated investments. And this is very important because they could begin to sell off their U.S. treasuries, as could Japan, based on their status now as someone that's hired Bernanke to teach them how to drop money from a helicopter and start a frenzy and get out of negative interest rates by coming back and paying people interest and issuing their own bonds. So we're at a very, very crucial time, and yet it's kind of a yawner this week. Things are quiet as usual, but it's always quiet before the storm, and the storm is coming. It's like the hurricane out in the ocean. It's on its way. Will it be here in 1 week, 2 weeks, 3 weeks, 5 weeks? No one can tell you based on a lot of fundamental issues, but we can tell you that if you're going to get settled into physical gold and silver, this is the time to get it. The other things that we've got to watch as China announces their reserves are the terms you will hear: the redbacks are coming. We hear about the greenbacks for decades and years being the reserve currency of the world. Everything was settled in greenbacks, but now we're seeing the thing turn. The pendulum is swinging, and soon the redbacks, the Chinese special drawing right currency, will be the one we're talking about. And it will be the one that puts the nail in the coffin of the U.S. dollars. The Heritage Foundation just announced 4 years ago, when China applied for special drawing rights as the fifth currency to have special drawing rights behind the U.S. dollar, Japanese yen, sterling pound, and the euro, and the first one since 2001, we now see that the redbacks, when they come, they want to show their dominance in the world and will use special drawing rights. And the Heritage Foundation came out this recently, I think it's 2 or 3 weeks ago, with staggering numbers that with only 900 banks and institutions using the redbacks, as we'll call them, or the yuan or the renminbi as their reserve currency or exchange currency, the Heritage Foundation says there's 10,000 banks and international corporations that the minute the Chinese get their special drawing rights on October 1st, 10,000 will leave the U.S. dollar, and some of them will leave and take both. Some of them will only take what we're calling the redbacks as payment. This will be very detrimental to the dollar. And as people dump the U.S. treasuries, because now they'll be buying other bonds issued in Japanese yen and Chinese yuan or Chinese renminbi, then we'll have nobody to buy U.S. Treasuries. So then the Federal Reserve has to buy them, and we see a steep drop in the dollar. We're already down 4% in the dollar, 3.5%, 4% the dollar this year, and we've seen nothing of the liquidations we're getting ready to see. The other thing that shows the power of the redbacks coming is what China is asking wholesalers and refiners in the world to make, and that is they want more gram bars instead of ounce bars. Now, the ones of us that are holding ounces, it's not going to be a negative thing to keep holding ounces, so you don't need to call me and ask if you need to trade into grams. In fact, to start with, you really don't, because the premiums are high, and the telemarketing firms will use this because now it will be even harder for the average investor to realize how many grams equal an ounce and so forth and so on, and figure what they're really paying. But it is something that we will see more and more gold and silver being made in grams, since that's what the Chinese want, and that's what the Chinese will get. So we don't want to, forget that. The other thing I want to mention is the Chinese are buying everything. Back in February, they bought the high-frequency trading Chicago financial stock exchange. So we're now looking at them getting the vehicles out there to take over the financial world and be the one that people want to exchange in. And then you've got to hold Chinese bonds if you're an international corporation or a central bank, and not dollars. So now they've come in and bought the most high-frequency stock exchange in the world. They already own it. And now they're going to do all this other we've just talked about. So people, we're there. You need to make that decision. And for the ones over there still following the Shemitah, it ends the end of September. So we've got that coming up. The wedding season for the Indians, the Chinese New Year in a couple months, the Jewish New Year's in a couple months, where people get bonuses and historically buy part gold and silver. And we're seeing the exchanges that are now open in China and Japan that are going gung-ho in selling physical gold and silver to the public. So these are all extremely high things. So don't look at the lazy, crazy, daisy days of summer, lackluster demand that we've had the last 2 or 3 weeks and think that gold and silver have hit a resistance and are not going to break through it, because they are. Gold is still up 23.6% this year. Silver is still up 40% for the year, even with the recent pullback of 3% in gold and 8% in silver. We're still up 23.5% and nearly right at 40% in silver, and we're going into the best time of the year. So if you need to talk to us, give us a holler at 800-247-2812. You can speak to Dan and Kathleen or myself. Dan's been with me 21 years. He certainly can help you if I'm not available. And if you want to talk about rolling a IRA into a self-directed precious metals IRA, we'll walk you through that. If you're still holding rare coins, we would strongly urge you to get these liquidated. We can help walk you through that and get you real values. And just realize you want precious metals. You do not want rare coins going into the environment that we expect the next few years. Throw in the ISIS, throw in the election, throw in all the other things going on in the world, and we do think you'll see increasing demand in 2016 and 17 in precious metals. So hopefully you've done your homework, you're ready to ask questions about what kind of gold and silver do I need, what percentage in my assets, and we're here to answer those questions. With this week's Precious Metals Market Update, this is Tom Cloud signing out.